Hello everyone and welcome to the new episode of the Learn and Trade with Popeye. Today I would like to show you the way I map and I use order block, because they are a very important part of my training style and strategy. We will see together how to identify the order block and what is a valid and what is not a valid order block. So we will see everything, and I will try to keep it as simple and practical as possible. Before moving to the chart, a big shout out to ZoomeX, that is the sponsor of this video. Make sure you trade with me on ZoomeX. You will find the link in the description below, and currently we are running a super cool campaign where you get 100% cashback on your first deposit. So whatever you deposit, you will get the same amount as a cashback on trading funds. Also, before moving to the chart, make sure to like the video, to comment, and to be subscribed to the channel, as it will help me to see that you enjoy and you like this content. But without further ado, let's move to the chart and let's see what is an order block. So to make it simple, an order block is a sort of consolidation that we can see in price that show us a participation of institutions or market makers, or anyhow big buyer or big seller that are able to move the price pretty strongly. Once identified, these order blocks give you an hint or a suggestion that there was a participation of market, let's say, movers or big investor on that price level, and so it gives you the relevance of that specific level, potentially for entry levels for your trade setup. Order block usually looks something like this. So we have let's say a downtrend. The price move down in this downtrend, at a certain moment start to do a sort of consolidation, and once this consolidation is over, we do get two important things. One is the market structure break, and second is the displacement. So what we have, we had potentially a bearish, in this case, trend, a bearish market structure. We do get a consolidation. After the consolidation, to identify properly the order block, we want to see specifically two things, then we will see in the chart. First is a displacement. So you want to see a very strong move without much of a retracement, so also to call it a fair value gap. Basically, you want to see this move without much of a retracement, so we have to leave a gap on the way up. The second part that you want to see is, if this was our bearish trend, you want to see a market structure break, so the structure turn from bearish to bullishly. This candle in the relative time frame should be a very big, strong candle, full, let's say, candle. And once you identify this block as an order block, you will try to enter in a possible dip on something like this. Why is relevant this block of order? Why is called order block? Because we consider an order block a place where market makers, institution, big money makers have managed to place their orders, their ask, their bids, whatever is a bearish or bullish order block, in this area. So they manage to fill their order, to fill their intention, if you want to tell a story, and their intention was, in this case, we did have a bearish trend, so their intention here was to accumulate. So they wanted to accumulate as much as possible in this order block. So it was a block of orders. So in this case, they have bids, orders in this area to accumulate as much as possible in order to then gain money when, thanks to their order and to their buy pressure, the money gave them this displacement. So since they place a lot of order, a lot of interest in this area, we can assume that most of order block, then nothing is certain 100% in trading. Whenever will be revisited, it will be a strong support and will potentially move the price higher. The same applies for a bearish order block that would look potentially something like this. So we do have to have a bearish order block, we do have a uptrend, then somewhere price start to consolidate, and finally we get a bearish move. In this case, this is a bearish order block where we did have a bullish move, we did have a consolidation here. In this case, this consolidation resulted on being a distribution, so market makers, big institution, whatever, had their ask filled here to move the price lower. And after this consolidation, the order block, this block where there were a lot of order to distribute the price, here they took profit basically, or they filled the short order. They managed to move the price with a strong displacement, that is what we have seen here, and we did get the second condition, that is the market structure break. In this case, we broke the market structure bearishly, forming a fresh lower low. Again, if we see this condition, our strategy would be to enter short here and move lower. So we do have to make it more clear, to have an order block, you need to have a trend, a consolidation, a break in this consolidation on the other direction with a strong displacement that create a market structure break. What you also want to see in this movement is potentially a sweep. So like I make it here. So you don't want to, let's make this one. You don't want to see, if this was the structure, you don't want to see an order block like this and move higher. What you want to see, then I will explain you the difference, is that the structure was this, the order block should be like this. Basically, you want to see the order block taking out liquidity. If you see, this order block didn't take out liquidity, so you don't want to see a series of flows like we had here, untapped and move in the other direction. You want to see all these lows being taken out before moving to the other direction. So we do have a liquidity component in the order block where you want to be, when you want to see the job of the downtrend down, all the liquidity of the potential wrong long, people that long here taken out, here taken out, these are not taken out. So here there are longs open that are not being taken out. So these should be taken out as it happened here. So to show you more clearly, here there were longs, to make it clear for you, here there were longs and they've been taken out by the next one. These longs have been taken out by this, but this long has not been taken out, as you can see. So this order block is not valid because it didn't until this liquidity of all this long. While if you see the other order block I made here, these are taken out, these are taken out by the next. Here we have the last, let's say, and all are taken out before the price move to the other direction. So you don't want to see lows unswept on this downtrend before moving to the right direction. The last part, let's say, on the strategy is that the order block should have a clear target. It can be a resistance, it can be a liquidity, and we will see in the chart how we can identify this target. And we will see also more specifically how to trade it clearly. But let me show you some examples so we keep it a little bit more practical. I saw the Ethereum chart have some interesting order block, and if you see this chart, let me go a little bit in higher time frame, you can see that Ethereum has been moving in a downtrend here in the past. This is very high time frame, the 3-day, we can also see on the weekly. Then something here changed and we started to uptrend. So we can argue that somewhere here, I don't know, the market structure break, or even here the market structure break. So there is some involvement on this low, probably in this part could be considered an order block, this part could be considered an order block, and we see that after the price started to move higher. You see this was a little consolidation, this was a little consolidation, and the price moved higher. Probably this order block was retested here, so we did get the first break here at this level, the retest, and then we started to move higher. Then we will see if these are all valid order block. Here we did get a little downtrend, this order block was created, it created this very strong impulse to the move up, and this is exactly where Ethereum came down to retest, as you can see, and where created the move higher. So let me mark them for you so you can see them a little bit better, and we see if these were clear order block or no with the reasoning I gave you. This was potentially one, and this was potentially another one. So we do see that in both cases there was a market structure break. So this was a structure that was coming down, down, down. This potentially was the last low. This order block here took out all this low. So we say now that we want to see all the low of the previous low taken out. We did have a consolidation. After this consolidation, let me make it more clear, these candles were straight up. So this is exactly the displacement I was mentioning. So straight up, moving very strongly to the upside without much of filtration and without filling this gap. Price create a market structure break. We come down to retest. In this case now, as I map it, then we will see it better how to map them. Was not exactly retested, and we did get the move up. We did get a bearish market structure break here with this low. Again, we started to consolidate. Again, we take out the low, you see. The liquidity is and we get out the low. We started to create the second order block, and the second order block gave us this very, very strong impulse back in 2023 of Ethereum. Ethereum then started to consolidate, break down, retested this order block, and now move up again. We can probably see also the bearish one, that potentially bearish order blocks usually they tend to form a little bit faster. We can go in some lower time frame to see it. Let's see the daily. So we did have this sort of consolidation, little consolidation here, market structure break, retest, and going down. Retested the second time and moving down. So in this case we do get the displacement, that is this one. We do get the market structure break. Just this consolidation was very, very little, very, very, very small, so it didn't last long. But this has something to do with the way market moves. Usually bottom takes time to form, while tops are a little bit faster to form. Let me see if I see something else on high time frame. I would say no. So the way I try to map them is this: usually for the block is better to always look on high time frame. So to be tradable, I use usually very rarely 4 hours. I use then 12 hours or daily order block. So to be valid on that time frame, you want to see that time frame market structure being broken. So if you want to see the one that I mapped on Ethereum in high time frame, but you can do also in other time frame, is that the weekly structure here was broken. As you can see, let me zoom it a little bit more for you. So you see that the weekly structure was probably this one with the low here, lower high, lower low, lower high, lower low, and here there was the structure break. So here we form a fresh higher high. So this area can be considered an order block on this time frame, that is the weekly. So the way I selected is more or less the last red candle or the last relevant red candle of this one. So for me the order block is this week. This will be a weekly, because it's the weekly time frame order block. We can see if it's also a monthly order block to make you understand the logic. Did we get after this a monthly market structure break? In that case, it would be also a valid monthly order block. Not sure how I would interpret this, but probably here was broken. No, I think it's just weekly or bi-weekly probably. Yes, probably here was broken somehow. This is something I'm doing live, so don't take it. This was probably broken. Then we start to move here. and potentially this was a break, but not so clear. But it's important for you to understand, as I was showing you on the weekly, that there is a break in structure on that time frame. Once there is a break in structure on that time frame, you can stay on that time frame and look for the red candles that formed that move. So as it happened there, here probably in the weekly, the second one, so this was this candle here and this consolidation, so this is the order block. This one was not a weekly, you see, break, because the weekly continued to bullishly. So we have to go lower in time frame and look in which time frame we break the structure, and this is probably the daily, because daily here turned bearishly, and finally after this order block we got a displacement and we break the structure on the daily. So we will look for daily candle or daily consolidation to see this order block. Let me see if I found something else, probably in Solana. I'm going by memory. This is probably what happened recently in Solana on the daily. Yes, this would be a valid area for an order block and a valid area to look for an entry, but it's not yet retested. We do have a downtrend here. At the end we take out all the lows and we finally break structure here or here, wherever you want to see, and this area is the area that can be considered as an order block. Then you can see order block even lower time frame, especially when these moves are aggressive like the market we are seeing now, and order block are even these or smaller time frame. As you can see here, this probably is a valid one. The market structure here in the 4 hour is clearly bearish, 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 bearish. Last lower low that take out all the previous low. Structure moves high, so you can see that we do have a consolidation. We do have a very strong displacement. This displacement arguably break the structure. This level is almost retested. If you see almost by descent, this level is retested here, and after we get the continuation. So this is probably a very clean order block on the 4 hour, and you can see price just tap this level and move higher. This has the condition that I was telling you on the 4 hour. Market structure break, if you want to say here or here. Very clear displacement. These are the sort of candle you want to see. This is a clear displacement after an order block that was this level here. Market structure break, strong displacement, retap and moving higher. So I think it's clear. You want to see exactly as we see in this chart. I'll make it so in case you can screen save it. As you see this one, you want to see a move down, you want to see all the low be taken out, the order block form in some form here, sorry, I'm very bad at drawing, moving down, taking out, displacement, retest and go. So I think it's should be more or less clear. Same it happened for the bullish order block. So now I will try to explain how I trade them. But if you want to trade, make sure you trade with me on ZoomeX. You will find the description, the referral link on the description below. You will get a 20% discount on trading fee, but also if you register before the end of May, there is this super cool campaign we are running where you get 100% trading funds on your first deposit. So you basically deposit 1 and you are matched by a 1 on trading funds. What is super cool, that is up to 100 USDT. So to give you an example, if you deposit, must be the first deposit 5k, you will get 5k as a matched fund, so you will be able to trade with 10k. Just make sure to read read the rules and to comply with all the requirement. You also get a 20% discount on trading fee, and ZoomeX is a non-KYC account, so it's super simple. You don't need to share any of your personal information to trade with, and you can make multiple accounts in case you have already one and you want to have a first deposit on this campaign. So finally, to see the way you can trade the order block, as we say, the order block in a downtrend would be a consolidation here, giving us a move higher. The way you want to trade this is that you want to try to enter somewhere in this order block. Your stop loss should be lower than the order block, because trading is never a matter of being precise or 100% to the tick. Then I will explain you how to make it, and you have to aim, depend on what is your move, your target, some liquidity level. So for example, I don't know, this order block that we saw here down in Solana, here I can see quickly there was to equalize, so you have to find the liquidity level, a resistance level opposite to the order block that you want to trade. So let's say you enter here, you want to trade some logical liquidity level. The entry, it depends on how wide the order block is. The wider it is, the more is recommendable to put probably a two entry. So in this case, if the order block was very wide, you can make two entries. One more or less, especially if it's a very valid order block, usually will just be tested at the very beginning, one at the very beginning and one somewhere in the middle at the 50% of the order block. So let's say that you identify the order block to be something like this. You want to put the first entry more or less at the beginning of the order block and the other in the middle. Usually, as a good rule of thumbs, if an order block is wide 5%, you want to hide your stop loss half or the same percentage of the order block. So if this order block, let's see, technically is okay, this is very big, but just to give you an example, 50%, you want your stop loss to be 25 or 50%. So half, as I say, half of the thickness of the order block, or if you want even to be more safe, same thickness as the order block, because it can wick a bit lower, especially in liquid coin. In crypto it's very simple, that order block can slice be a little bit. Taking profit again on the top, somewhere resistance or liquidity, and you can always add for confluence, as I always do, some Fibonacci. So in case this was the move, your entry can be in confluence with this Fibonacci, for example, something like this, to give you further confluence of this move. What you would expect is, again, consolidation, displacement, market structure break. You want to see this level be retested along with the confluence of Fibonacci, and then you want to see a quick move to the other direction. You don't want to see, especially the second time the order block is tested, you don't want to see a further consolidation. So you don't want to see, in lower time frame is fine, but in higher time frame you don't want to see price starting to do like this. Usually valid order block on the high time frame that you're watching should give a strong move. So if this is a weekly order block, it's normal that on the 1 hour you will have something like this, but on the daily you don't want to see the many daily candle here, you want to see a quick reaction on the other direction. So in a downtrend, consolidation, displacement, market structure break, you create an order block, you put your order in the order blocks, better if split, stop loss halfway, half the thickness of the order block or the same thickness of the order block below, targeting some liquidity or resistance level high above, and you want to see a quick bounce after the order block is tested. I think it's enough for the explanation. I hope all is clear. Make sure you drop me a question if you have any doubt, and Before leaving, make sure you trade with me on ZoomeX. You will find the referral link on the description below, and you subscribe to the channel, leave a comment and a like. I really hope you enjoyed the video under the block. All is clear and you can integrate it on your trading style and strategy. All for today. Take care and stay safe out there. Bye.